Module Overview. To enable farmers and agripreneurs to effectively identify, record, assess, and mitigate potential risks in their farming operations through proper documentation, and to introduce the critical role of agricultural insurance and risk preparedness in ensuring sustainability and financial resilience. Agriculture, though vital to global food security and rural livelihoods, is inherently risky. From unpredictable weather patterns to pest invasions, disease outbreaks, price volatility, and theft, farmers constantly operate in an environment of uncertainty. Managing these risks is not just about reacting when something bad happens, it's about preparing in advance, understanding potential threats, and keeping structured risk management and insurance records that can protect the farm from financial collapse. This module dives deep into the recording systems and insurance structures that support risk mitigation. It emphasizes the need for farmers to maintain specific logs, reports, and claim records that enable them to build business resilience and secure compensation in the event of disaster. Understanding agricultural risk. Agricultural risk refers to the likelihood of losses or disruptions in farm operations caused by natural, economic, biological, technical, or social factors. Types of risks in agriculture. We will use table with column, risk type, and examples. First, production risks. Drought, floods, pests, crop diseases, livestock epidemics. Second, market risks. Falling produce prices, unstable demand, inflation. 3, financial risks. Loan defaults, high interest rates, lack of access to credit. Fourth, legal and regulatory risks. Land disputes, policy changes, new taxes, certification issues. 5, environmental risks. Land degradation, climate change, contamination, deforestation. 6, personal health risks. Injury to farm workers, family illness, death of a key decision maker. 7th, technological risks. Equipment breakdown, outdated methods, cyber threats for digital farms. Risk management records, what to track. First, risk identification log. A structured table that records potential risks observed or anticipated on the farm. Columns. Risk type, date identified, risk description, potential impact, mitigation strategy. Second, incident report forms, used when an actual adverse event occurs, e.g., barn fire, pest outbreak. Details, incident date, cause, damage details, who, what was affected, immediate response. Third, risk assessment reports. An analytical summary of the likelihood of risks and the severity of their impact. Useful for annual planning and insurance evaluations. 4, emergency response plans. Documented step-by-step guides on what actions to take in case of fire, flood, chemical spills, etc. include safety protocols, emergency contacts, and contingency operations. 5th, loss and damage register. A chronological record of all losses, what was lost, value, date, location, and whether it was insured. Agricultural insurance records. Agricultural insurance is a contract policy between the farmer and an insurance provider to reduce the financial impact of specified risks in exchange for a premium. Keeping the right records ensures you're protected and can make valid claims when necessary. Types of agricultural insurance. Insurance type and what it covers. 1. Crop insurance. Covers loss due to drought, flood, pests, disease. 2nd, livestock insurance. Compensates for the death or disease of animals. 3rd, farm property insurance. Covers tools, machinery, buildings, storage facilities. 4th, weather index insurance. Pays based on weather triggers, e.g., less than 300 millimeters of rainfall in a season. 5. Income protection plans. Guarantees minimum income levels even during production shortfalls. Key insurance records to keep. 1. Insurance policy certificates. Documents showing coverage details, provider name, premium paid, and duration. 2nd, premium payment receipts. Proof of timely payment, necessary when making claims. 3rd, claims documentation. Includes forms, photographs of damage, incident reports, loss valuation, and all communication with the insurer. Fourth, insurance provider contact logs, dates of communication, representative names, summaries of conversations. Fifth, claim settlement records, amount received, payment date, and official confirmations. Benefits of keeping risk and insurance records. Enables better planning and mitigation strategies. Enhances credibility when applying for funding or insurance. Facilitates quicker and successful insurance claims. Helps with compliance, especially for farms exporting to countries with traceability standards. Builds a culture of safety, accountability, and preparedness. Real-life application example. Imagine a poultry farm that experiences a sudden Newcastle disease outbreak. If the farmer has a disease risk entry in their risk log, completed insurance paperwork for livestock health, keeps records of vet consultations, photos of deceased birds, and vaccination schedules, maintains receipts of all insurance payments. Then they can claim compensation from their livestock insurer swiftly and continue operations. But without records, the farmer has no proof and may lose everything.